Good morning, everybody. This is Dennis Wilborn from the Active Trend Traders. You can visit us at activetrendtrading.com, and also joining us long distance from San Diego, California, actually Oceanside, David Grandy from All About Trends. How are you doing this morning, Dave?
I'm doing great. It's been a great vacation this week.
That's awesome. So you took your advice last week about the market's not going to do anything this week, and so you went to the beach.
Yeah, it's a great opportunity, spring break. My wife works at a school, so she has the whole week off. So we're like, okay, let's go down and have some fun in the ocean.
That's
so
absolutely
that's what we did.
That's absolutely phenomenal. You know, and I want to welcome everybody who's joining us live, but I also want to give a special welcome to all the international folks who have been joining us, either via the recording or live. We've got folks who are joining us from Ireland, from UK, from Canada, from Singapore, even a few folks, believe it or not, David, from the United Emirates,
That's outstanding.
who are tapping in. So we appreciate the opportunity to be able to share what we're seeing going on in the market and some of the potential setups we see moving forward into next week. As a reminder, all the materials that we do present are for training purposes. We are not making any recommendations, and all traders should paper trade any new method prior to risking their own personal capital. I presented the same slide last week, and it's about elements of all good trading and investing systems. One, they're going to tell you what to trade. Secondly, they're going to tell you when to enter the trade, your entry action points, when to exit the trade, and what strategies to use to minimize risk and maximize your profit. One of the slides I showed everybody last week as we were looking at the market, expecting a potential rebound, was this slide. It's the numbers, percentage of stock on the NYSE that are above the 20-day moving average. Last Friday, we were here, and I made the comment, and you may remember this, I made the comment that any time that this indicator got down into this 25 to 20 level, oftentimes, the majority of times, you got some kind of a reversal back up, and it turned out to be fairly significant. You can find this chart at barchart.com. Look under the momentum studies, and it will show it to you. But you can go back and track these days yourself to see what the S&P or the indices did after these low spots. I think you'll find it really remarkable. And so as we see this week, we're continuing to climb back up. But the big question all of us have is what's going to happen next in the market? What are the precursors that are happening? I'm going to do a real quick market review. Then Dave's got some really excellent discussion on what he's seen. But as we take a look at, let's start with the S&P. On the right side will be the weekly chart. On the left-hand side is the daily chart. As we see from the S&P, it was stronger than all the other indices. It and the Dow were stronger than the composite, the NASDAQ composite, and the Russell. What we saw last week is we had a shortened week, and we get a bounce back up through the 100-day moving average, and then the next Tuesday, Wednesday, Thursday continues and breaks back above the 20-day moving average, back above the 50-day moving average. So it looked like the S&P is doing just a wedge up before it falls further down. And one of the other things that I noticed as I was drawing this chart is the S&P appears as if it is putting in at the red dotted lines an expanding top. Expanding tops normally resolve to the downside. So it would not surprise me at all to see the market, the S&P, continue up maybe to this resistance level here, or even back up to its old highs up here, and then potentially reverse lower. S&P again stronger than both the NASDAQ and the Russell. NASDAQ, let's take a quick look at that. One of the things I find interesting about the NASDAQ, a couple of items that perhaps give us a little hope that we may retrace a little higher is one, the NASDAQ on the weekly chart, for those who like candlesticks, it is put in a bullish harami where the body of this candle, this week's candle, finishes inside the body of the previous week's candle. That typically is a bullish reversal signal, and if we move back over to the daily charts, what we see on the Russell or on the NASDAQ is just an absolutely phenomenal one-day reversal, which happened on Tuesday. And where did we bounce at? Right off the 200-day moving average, went back up through the channel line, puts in a hammer doji, which then confirmed the next 2 days, and the NASDAQ itself finished back above the 8-day moving average. However, it had much more damage done to it than the S&P, so again, it would not, where's my expectations on this? The 20-day is going to continue doing this. The 100 is starting to troll over. The 50 is going sideways. So we might look for a reversal up in this area. And I think that the composite, if the drawings I put on prior to starting this discussion stayed on my chart, which I hope they did, is we get a similar pattern with the Russell. I've thrown in the Fibonacci retracements on the Russell from the high to the one-day reversal here, and look where we're moving up towards. We hit a 38.2% retracement on Thursday, and the yellow is what I call the magic fib box, and it highlights the 38 to 61% retracement level, where if something is in a downtrend, you can expect oftentimes a bounce back into the magic fib box, and then a reversal down to there to tell you that the next leg is starting down. So based on that, it also has a lot of confluence of convergence of clues coming together. You've got the 100-day pulling into the fib box, the 20-day moving down into the fib box, and so it would not surprise me at all to see a retracement all the way back up towards the 50% retracement, and then I'll start looking for small bodies on the candles, showing the potential of a reversal back to the downside. The intermediate downtrend is still in place for the indices. So, David, that's what I've got on the market. Hey, what do you have? And that wonderful analogy you provided for me earlier today was absolutely awesome. I'm swapping over to your screen.
Okay, great, Dennis. Thanks a lot. I just got to figure out how to get my slideshow here to start. There we go. Okay, so yeah, great analogy there, Dennis. And I'm just going to pretty much echo your comments with the indexes. Last week we talked about the markets being at major support, and we were looking for a bounce, and that's exactly what we got. NASDAQ bounced near the 200-day. However, like you said, we're still locked in many downtrends on all the indexes. We're not really seeing good quality. For those of you that are more IBD type traders, we're looking for good quality stocks emerging from sound bases and breaking out. We're not really seeing a whole lot of that yet still. I think we're still in the early stages of everything resetting bases. So in my opinion, it's still a market where cash is king. If you're an experienced trader, there's some good setups out there. But if you're a beginner or you have a smaller account balance, it's probably best just to sit tight right now and let the let the market reset the pins here, and then you can go bull for strikes later when the market's a little bit better. So just looking at some index charts, you see the NASDAQ here bounced at the 200-day and right up to the downtrend channel resistance right now. And so the question is, will we break above this and keep going, or will we head back down again? The S&P, a little bit better shape, back above the 50-day. It broke its mini downtrend to the upside, so we could easily keep on trucking back up here to the old highs, as Dennis suggested. So it's just kind of a, it's kind of no man's land right now. We could either go up or we could go down. So the best thing for us to do, for those of us that still want to trade this market, is to be prepared for either side. So if we do go up and continue to this bounce continues to go further, we're looking for stocks that are confirmed uptrends, that are above the 50-day moving average, that have pulled back in an orderly, low-volume manner towards areas of support. And we talked about Zulily last week. Now, this one's not necessarily above the 50-day, because in this market you have to give stocks a little bit more room. But the overall pattern is there. We have a stock that broke out and has pulled back fairly orderly towards the prior breakout level, and this is how it handled last week. It found support once again at that level and triggered a long side trade by breaking above the pink line. We'd like to really see this get up and go, a little bit more, with a little bit more power than it's shown, but thus far it's still intact. We have another new setup too, Future Fuel. Again, a breakout here on earnings, and it's pulled back. What we'd like to see here is it to complete the pullback down to the blue line again, retest that support, and then make a move higher. And a move above the upper blue, light blue line here triggers our long side trade. So that's what we'll be looking for this week on the long side. On the short side, we're looking for stocks that are in downtrends, that are below the 50-day, and have rallied back off of their lows to areas of resistance. And I think we talked about this a couple weeks ago, Palo Alto Networks, and it's setting up yet again. So here we have a stock that wasn't an uptrend, broke support of the trend channel and the 50-day, came back down, found support, and has rallied back fairly orderly, and it's bumping up against what should be resistance now at the 50-day moving average, and it's short-term overbought. So we're looking, so should the indexes fail here and reverse lower, this stock will probably do that as well, and then a break of the pink line to the downside triggers our short sell trade. So those are really the best setups I have right now. There's not, again, there's just not a whole lot of good quality patterns out there. So I've been saying this for weeks now, and the best thing to do is just wait. The best time to re-enter a market is when there's an abundance of quality patterns, and we're still not there yet. If you are a beginning trader, I mean, the best thing to do is just sit tight. I don't recommend trading because you got to do a trade. I would say right now mostly in cash and just wait for things to set up. We started this webinar with Dennis mentioning that I've been in Oceanside all week, and I went surfing. Most of the week I've been surfing. The beach right outside the house we're staying in is horrible. The waves are nice, but they just roll over you. They don't give you a ride. Just to even get out there, you have to go through all this crap, and there's like this big drop that you never know exactly where it is, and the current is huge, and it takes you where I don't want to go, and it's just horrible. And I feel like that's where we're at with the market right now. We've got an ocean where they're putting up riptide warnings, and it's just best to stay out, because if you go in there, all you're going to do is get frustrated. You're not going to go where you want to go, and you're going to be tired and worn out and not be ready and prepared financially and mentally when it's time, when the market does reset itself. What I would suggest doing is just take it easy and wait for a nice ocean where We got nice waves. We don't have these crazy currents. We can all ride the wave together. We'll get a bigger ride and a longer ride, and you'll be, prepared mentally to handle that, and financially too. I mean, right now is the time to go out and work extra hard and save extra money and put it in your brokerage account and build up your nest egg here, so that you're prepared and ready to go when the tide changes, because it will change, and it'll be a lot of fun, and it'll be a lot easier to make money, and that's my suggestion. So I've been thinking about that all week, just in the ocean, and it's just so funny that the ocean out here right outside my window is horrid, but if I go 200 yards up the shore, there's a perfect beach, real flat. I can actually walk all the way out in waist deep water, all the way out to where the waves are, and catch them, and it's perfect, and there's no big currents, and it's just a lot easier. It's just so funny that happened, because it's a perfect analogy of what we're dealing with in the market right now. And finally, if you want to contact me, please do. Please send me an email, give me a call. I love talking about stocks and helping people be successful in the market. We have a 15-day free newsletter you can take a look at as well. And I think that's all I have, Dennis.
David, thanks. I like the alert you guys sent out on Palo Alto Network so much that I actually opened a bearish position at the close yesterday. Basically what I did is I went long a put spread with expectations that it's going to fall back down to the 65 level, somewhere around there. And so that's, I just want to let you know that that's the way I use that information that I received from you guys, and I really appreciate it.
You're very welcome. Great.
And so I really love that. Guys, Dave talked about basically, now's not a time to go back in the market, and I'm about 85% in cash. At the same time, with the active trend trading system, there were a couple of stocks that I'm going to highlight, because in May, the active trend trading website is going to start offering a premium service of stock picking and tracking and training. And we had 3 trades that triggered this week that I'll just hit really fast with everybody. One was Tesla. I like Tesla's story, not so much because of its electric car, but because it is a provider of a lot of the components that are going into the other electric car manufacturers. Like they sell parts to Toyota, they sell parts to Ford, and it's almost like Tesla's kind of like cornering this market on the accessories that are going to be needed for somebody to have an electric car. So I kind of liked that. Anyway, the trigger on Tesla, just real quick, was this rebound off of the 100-day moving average. They've been going a while, and this level about 189, which was the top of a gap up window, which is a natural level of strong support. Now, since I opened the trade, I'm up about 4%, and what I did was I sold puts against it. I basically said, okay, I will sell weekly puts against this. I would like to own the shares. If it goes against me, that's fine. It will give me a reduced cost basis for owning a few shares. But when because the market is correction, I only nibbled a little bit, not a lot. I only went in for a couple hundred shares if it's put to me. And so that I didn't want to go in with a full position. So far, Tesla's up about 4% since we executed the trade. Another one that just seemed really awesome was Kihu. We've been following this one. And again, it does a very similar thing. Comes down to the 200-day average and bounces fairly strongly, a little bit low on the volume. But this action point down here at an established level of support and the moving average provides our trigger to get into the trade. So far, we're up about 10.8% since last Tuesday on this one. And the other one that we like was Trip. All of these were good quality, fundamentally sound growth stocks. Similar type situation here. It bounces back up through the 200, retakes the 20, and again, so I just nibbled with a small position, well, with actually selling puts against this one also. I own shares of QIHU. I want to maintain that because each one of these has weekly options, and the weekly options is one way that I generate additional just weekly and monthly cash flow to coincide with my longer-term trading. But this was a couple of the triggers that I saw for the week. And where's our target? You know, back up here at the 100-day on Trip would be fine. If I have to buy the stock, it's fine. But it has sit in this long. It may be put in the bottom of a big cup. But that's what I was seeing for the market. So what do you think, Dave?
Yeah, I think those are excellent examples, and I really like the strategy of hedging your risk with selling the premium,
Okay.
you know, with the options. So, like I said, you know, there are trades out there for those of you that are more experienced and want to trade. So it can be a real exciting time. You know, there's a lot of volatility, so there's opportunities there for sure.
Excellent. So Dave, that